Hi, I'm Nino Gonzalez, and welcome to another episode of Making Sense. Well, many of us in January are going to be receiving these two type of forms, and we'll try and make sense of all these boxes in this episode. We're going to talk about these forms that you'll probably be receiving in January, and one is very common that we all get usually by the end of January or maybe within the first week of February, and that's Form W-2, which is basically your wage and tax statement. And Form W-2 is the form that we all use to prepare our federal income tax return. But I was surprised that a lot of people really don't know what is included in these boxes. So I'm going to go over the most common things that you're going to see on your W-2, so that way when you get them, you can decipher them and you know what it's all about. Now, many of us get these forms now electronically. So either our employer or the payroll company that is running the payroll for our organization sends us a link to download these forms and we can print them out. Usually in the past we would receive them in the mail. Now that is going away and we're receiving those electronically. So if you receive them by the mail, they at least have to be postmarked by your employer by January 31st. So that doesn't necessarily mean you'll receive them by January 31st. They just have to be postmarked by the Postal Service by January 31st. And depending on the delivery time, you might get it a few days in early February. So let's go ahead and take a look at this W-2, and the most common box is going to be box number 1, where it says wages, tips, and other compensation. Well, this is basically what that is. It's going to include any bonuses, any commissions, any tips if you're a tipped employee, any wages that you get paid during the year. Now, what this is these are the wages that your federal tax is based on. So your wages will not include if you participated in any tax deferred programs, such as if you're contributing money to a 401k plan, which is the most common, which is a pension plan. Well, that amount will not be included in box 1 because you're not going to pay taxes on that now. You're going to be paying taxes on it when you retire and you start withdrawing that money out. And there could be also some other things that are taken out that are not taxed on, such as in a previous show we talked about flexible spending accounts. And what are those flexible spending accounts? There's two types. One is for medical expenses and the other one is for dependent care benefits. So this is money that you set aside and to pay for either child care or for your unreimbursed medical expenses such as copays, deductibles, maybe blood pressure monitoring equipment, glucose monitoring equipment. So anything that there's a list that is provided by the IRS in what is acceptable for these FSA expenditures. So the amount that you put into that FSA account, you don't pay taxes on. So that will not be included in your wages, tips, and other compensation. And there are also a variety of benefits that are pre-tax, which means you don't pay tax on it, so therefore that amount is deducted. But usually they have to be qualified under the IRS to be eligible for that treatment. But the most common is going to be your 401k, so that amount wouldn't be included in box number 1. Contributions to an FSA account, whether it be for medical expenses or whether it be for dependent care benefits. Now, with this FSA account, basically, especially for the medical expenses, you get like a debit, Visa, or MasterCard that you can use at your doctor's office, you can use at pharmacies, you can use it to get contact lenses, contact lens solutions, to the optometrist, whatever expenses that are medically necessary, you can use that card if they accept debit or credit cards, and it will be accepted there. So one of the things is that you got to make sure you estimate more or less how much you're going to use, because if you don't, you either use it or you lose it. But you do have the option to roll over $500 into the next plan year. So if you still have $500 left, that will be carried over into the next plan year. But anything that you did not use above 500 is basically lost. So it's good to come close to how much you think you're going to need for that flexible spending account. Well, then we take a look into box number 2. That's your federal income tax withheld, and that is what we use to fill out our tax return. So that will determine whether you were withheld enough and you're going to basically get money back, or you're going to owe money to the IRS. And how is this tax calculated? Well, in previous shows, I talked about how you fill out a W-4 form when you get hired, and basically you have two choices. You're either single or you're married, and you put the number of allowances, which is basically your dependents. So if you're single and have 2 kids, then you would claim yourself and you would claim your 2 dependents. So that would be single and 3. And if you're eligible for some credits, such as the child tax credit or the earned income credit, you can factor that in that worksheet of the Form W-4. So therefore, you're getting some of that refund in your paycheck and not waiting until you file your tax return. And you can be getting a bigger paycheck over the 12 months that you receive your paycheck. So that's the whole purpose of that Form W-4, and that'll dictate how much federal income tax is withheld based on the tables, the tax tables that are published annually by the IRS. So now let's talk about box number 3, Social Security wages. Well, this will probably be different than box number 1, because if you contributed to some of those 401k plans, or let's say the FSA, well, those are not eligible for that special treatment for Social Security wages. So Social Security wages, box number 3 and box number 1, will probably be different. Now, if you don't participate in any of these programs, then probably box number 1 and box number 3 will be the same. But in most cases, it's different. And for example, with my W-2 here at the college, and we've discussed this before with Social Security, is that here at the college, we don't contribute into the Social Security program. So my amount on box number 3 will be 0. Because I don't have any Social Security wages here, because we contribute into our own plan. So the same happens with teachers that are employed by school districts. They will not have anything in box number 3 because they have their own retirement system plan. So then we go into box number 4. Well, box number 4 is the Social Security tax that was withheld, and that's what we call one of the FICA taxes, the Federal Insurance Contributions Act. And Social Security, that is basically what's going to dictate your benefit once you retire, and based on the age that you choose to get that benefit, the longer you wait, the more your benefit will be. But basically, that is a flat 6.2% of box number 3. So whatever there is in box number 3, you just multiply that by 6.2%, and that should give you what the Social Security tax was withheld. So in my situation, box number 3 and box number 4 will be 0. Now we have in box number 5, Medicare wages and tips. Now, sometimes 3 and 5 might be the same, but in my situation, in box number 3, I have 0, but everybody contributes into the Medicare system. So I will have an amount in box number 5. And that amount will probably be different than box number 1. And not only that, Social Security there's a limit. And that limit goes up every year. So the limit is mostly for highly compensated individuals, and it's $118,500. So if we have an individual that makes more than $118,500, so let's say that I'm making $120,000, I would only be taxed on $118,500, and that would be the amount that would be shown under Social Security wages. That is the max that I can be taxed on. Why? because Social Security benefits are maxed. If I make $1 million, I'm not going to receive Social Security benefits on $1 million. So therefore, that is capped at an annual amount, and that amount seems to be going up every year. But Medicare has no limit. So for example, if we have a highly compensated individual and they reach the limit, on box number 3, it would be $118,500, but in box number 5, let's say they're earning $120,000, then that would show the $120,000 because Medicare has no limit. So then we move on to box number 6. That's your Medicare tax withheld, and that's a straight also percentage of 1.45%. So all I need to do is take box number 5 and multiply it by 1.45% to get the Medicare tax withheld. And that's how I can check the accuracy of these forms. And of course, Medicare is the health insurance that you get once you retire and you're not covered by another insurance program, whether if you're still working and you're still covered under insurance and you're eligible for Medicare, then you can't get it until you're not being covered by your employer-sponsored plan. So, and Medicare, of course, only covers 80% of your healthcare expenses. So when you're thinking of applying for Medicare, I suggest that you also apply for a Medicare supplement insurance. And there's a wide variety out there, but basically that's going to cover the 20%. Because knowing about how much a medical bill can be, 20% can be quite a financial hardship. So can you apply for Social Security and still be working? Sure. But you might not be eligible to get Medicare because you're still being covered by your employer plan. So you don't qualify for both at the same time. So you might get Social Security benefits first, but then you might be eligible for Medicare later on. So it's something to take into consideration because some people are working past their retirement age and they start collecting Social Security benefits. And of course, the longer you wait, the more that benefit will be. So my benefit will be more if I wait till I'm age 67 than if I get it at age 62. So something to really consider when we're thinking about applying for Social Security benefits and when is the right time to apply for Medicare. So let's talk about box number 7. If you're a tipped employee, then your Social Security tips will show there, and that's shown separately. So what happens is that will also be included as part of box number 1, but we have to separate that out, so just for Social Security. And basically, that will also be included as part of box number 4, part of that tax, part of that 6.2. So if you're a tipped employee, you would have to add box number 3 and box number 7 and multiply it by 6.2 to get the amount that is in box number 4. So I hope some of these boxes make a little bit more sense when you receive this form, when you take a look at it closely and see what all of it means. So we'll come back and discuss more about this form in the second part of Making Sense. Welcome back to the second half of Making Sense. And in the first half, I was discussing about the different boxes that are in your Form W-2. Many of us receive this form and we just take it maybe to our tax preparer or to our friend who knows how to prepare taxes, and we don't even bother looking at it. But we should know what these amounts in all these boxes are. Now, I know that sometimes it might be hard to follow me here and just watching one episode, but please remember that these videos are also uploaded onto YouTube in case you need to go through it at a much slower pace, or you need to refresh your memory on what is it that I discussed. But it's not just my shows, but all the fine TV programs that are produced by our El Paso Community College TV station. Well, let's continue on with the different boxes. So we have allocated tips. Now, you only have to worry about that if you're a tipped employee. And basically, allocated tips are allocated by your employer. Usually, if you worked in a large food or beverage establishment and you received tips directly from any customers, or the amount of tips you reported is a certain percentage that the IRS prescribes. So that would be reported there, and that amount is not included in box number 1. So this is only in addition to the tips that you received if your employee allocated additional tips. So that's what would be included there, but that's not part of box number 1. That's in addition. So let's take a look at box number 10, dependent care benefits. And what are dependent care benefits? Basically, your employer is helping you pay to take care of your children, usually under the age of 13, or any disabled individuals, family members. So they are actually providing, maybe they have a daycare at their place of employment, and they pay for that for you as a benefit that they offer you, or maybe they give you an allowance to help you pay for daycare. So that has to be reported on there, because especially if you claim the dependent care credit, that has to be factored in, because you're getting some of it paid by your employer. Now, the first $5,000, if you're married, of dependent care benefits is tax-free, and it's half of that, $2,500, if your filing status is married filing separately. So that's in box number 10. So now we go to box number 11. It says non-qualified plans. Well, these non-qualified plans, basically, they're non-qualified by the IRS, so there's no tax benefit. So usually we want to participate in plans that are qualified by the IRS, because we get that tax benefit or tax deferral, like a 401k plan. That will be tax deferred. I don't pay taxes on it now, but when I retire and I start taking money out of that retirement plan. So that is just for informational purpose, the non-qualified plans. Then in boxes 12, you have several boxes for. You have 12A, 12B, 12C, and 12D. So those are just box numbers, but underneath that, you see the word code. And these are basically, for reporting purposes, and I'll go through some of the most common codes that are being reported on your Form W-2. So if we take a look at these, we usually have code D, code E, code F, code G, and code H. The two most common ones are going to be D and E. And what is that? Well, that is what you contributed into a 401k plan. So that is what was not included in box number 1. So if you contributed, let's say, $1,500 to your 401k during the year, that will appear right there, and it would be tagged as code D. What is a 403B plan? Well, a 403B plan is usually for nonprofits and public education institutions, such as El Paso Community College or UTEP or Texas Tech. We contribute into a 403B plan, and that would be shown there as code E. So if we take a look at the other ones, you see a whole bunch of numbers. You see 401k, 403B, 408k6, 457B, and 501c 18D. What are those? Those are just different type of retirement plans for different type of organizations. The two most common are going to be 401k and 403b. By the way, why do we call it a 401k? A little bit of trivia. That's the IRS code section. So it's IRS code section 401k. And that's why we call it a 401k plan, because that's where it was created, in the IRS code section. So a little bit of trivia, maybe that might help you win some money on Jeopardy. I don't know, hopefully. So let's take a look at some other codes. Another one that's most common is code C, and that's the taxable cost of group term life insurance over $50,000. What does that mean? Well, if you're employed and your employer pays for some of your life insurance, and that life insurance is more than $50,000, then the premiums that your employer is paying over that $50,000 life insurance is taxable to you as an individual. So the insurance company will usually let the employer know, let's say the employer has a $75,000 insurance policy on me. Well, the difference in premium between a $50,000 and a $75,000 insurance policy will be taxable to me. And usually the insurance company will let the employer know how much that extra cost is, and that gets reported in that box as code C. Now, we also have code W. That's employer contributions to an employee's health savings account. Now, a health savings account, what we call an HSA, is different than an FSA. A lot of organizations are now having their employers and employees contribute into a health savings account because they're turning into higher deductible plans. So some of these plans might be $1,000 deductible, $2,000 deductible. So we set up health savings accounts to save that money for those high deductible policies that your employer might have. And that's where that gets reported. Another one, which has been around for maybe a couple of years, is code double D. And double D is the cost of the employer-sponsored health coverage. And this came about because of Obamacare, the Affordable Care Act, and it has to be reported for information purposes how much your employer paid for your health coverage. But that's basically for information, and of course that also shows that you are covered under a plan and could affect your tax refund if you're not under a qualified plan. So let's take a look at box number 13. The most common that you're going to see is retirement plan. The middle box, that's going to be checked off if you participated in any of those retirement plans that we talked about, like your 401k and your 403b. So that would be checked off. Now, you also have another box, other. Well, that's whatever your employer wants to report to you. That might be necessary for you to prepare your tax return. And that's especially important if you itemize. For example, they might include union dues, educational assistance, any other type of information that you might be able to use on your tax return, and you might not even use it at all. It's just for information purposes. So that's what box number 14 is. So in Texas, that would be it, because we don't have to fill out the bottom, which is 15, 16, 17, 18, 19, and 20, because we don't have a state income tax. And Texas is one of 9 states that does not have a state income tax. So if you worked in Texas and you're a Texas resident, nothing will show up there, because that is not applicable to the residents of the state of Texas. Now, if you lived here in El Paso and worked in New Mexico, let's say maybe Sunland Park or White Sands, then when you get your W-2, you are going to have to pay a state income tax, and you would have state wages reported. But Sunland Park or White Sands does not have a local income tax. As a matter of fact, there's a lot of cities in the U.S. that also tax you on your wages. So you might, depending on where you live, you might have to file a form tax return to the IRS, one to the state, and one to the city. For example, if a lot of cities in Pennsylvania, they have a city income tax. A lot of the cities in Pennsylvania have a city income tax, such as the city of Philadelphia, the city of Pittsburgh. Detroit is another city that has a city income tax. And of course, New York City has a city income tax. So here in Texas, those boxes would not be applicable. So that is what a Form W-2 is, and we just basically went through all the boxes. Now, one of the ones that I want you to make sure you check is that on the top you have box A, and that's your social security number. Make sure that is reported correctly. So please pay attention to the details. Make sure that your information is being reported correctly and that it all makes sense, because if not, then go back to your employer so they can issue a revised or a corrected W-2. Because remember, these forms are transmitted to the IRS and also to the Social Security Administration. So That's your W-2. So now let's take a look at another form that you might receive. And that is Form 1099 Miscellaneous, MISC. And I'm only going to talk about one box in this form because that's the most common, which is box number 7. And box number 7 says non-employee compensation. And this has been a problem for maybe some individuals that are being classified as independent contractors, but in reality, they're an employee of that organization. Why would a company want to do that? Because they might not want to pay the taxes. Because when you're an employee, you have to withhold these taxes from the employee, and you also, as an employer, you have to pay a certain portion of the taxes, especially the Social Security and Medicare. They get matched dollar for dollar. So a lot of employers misclassify their employees as independent contractors. And what does that mean? Well, when you go fill out your tax return, you might be in for a big surprise depending on how much that amount is, because you're going to be responsible for everything. And so what dictates an independent contractor from an employee? Well, the IRS website, which is irs.gov, they have a wealth of information there on this topic. And this publication discusses the difference between an independent contractor or an employee. And if we take a look at this, basically it's control. You have 3 factors: behavioral control, financial control, and relationship to the parties. For example, let's say that I am a CPA, and I can offer my services to a wide variety of clients. And I control the way my work is done. I provide my own training. I provide my own supplies. I can do the work whenever I seem fit. But if I'm just the accountant for one organization and they tell me what I need to do, what time I have to be there, if I need to use their equipment, then I'm an employee. So as an independent contractor, when I see an individual coming in to do their taxes and they come in with one Form 1099 miscellaneous, well, are they really an independent contractor or were they an employee? Because if you're an independent contractor, you would have a variety of these forms because you have a variety of clients or a variety of businesses that you do work for. But if you only have one, then that basically means that that organization had control over you and you were misclassified. And so how do you get reclassified as an employee? Well, if you feel that you've been a victim of that, you need to contact the IRS and they need to open up an investigation to see if you were really an employee or an independent contractor. But it basically comes down to control. So when I have a plumber coming into my house, do I tell them I give them the problem, but do I tell them what tools to use, when to be there, how to do the work? No. And do they perform work for other houses and other businesses? Of course. But if that plumber is just working for one organization and that organization is telling them what they need to do, what tools to use, and what needs to be done, and how long they have to work, then that's an employee. So you've got to take into consideration whether you're an independent contractor or an employee, because I've seen a lot of individuals that have been misclassified and then they wind up with a huge tax burden. So make sure you go to the IRS website and take a look at that publication on independent contractor or employee. It's publication 1779, and we have been putting up screenshots as I've been discussing this. Well, I hope all of this makes sense. Like I said, if you didn't catch something, go up to the YouTube channel and search EPCC TV, and all our wonderful episodes, not just mine, but all the programs here at the college will show up. And we'll see you next time on another episode of Making Sense. Thank you.